In the world of investing, there is this gap. It's this space between just starting out with your first mutual fund and being, an ultra wealthy investor. Well, today, we're going to talk about a brand new vehicle designed to bridge that very gap. Specialized investment funds, or SIFs. Let's break down exactly what they are and, more importantly, who they're really for. So let's just dive right in with a question that, honestly, a lot of investors face. You've built up some capital, right? But you feel kind of stuck. You're way past the beginner stage, but maybe you're not quite in that super high net worth category. So where do you put your money? On one hand, you've got investors like Suresh. He's doing it the smart way, building his wealth consistently with a systematic investment plan, or SIP. He's putting in small, regular amounts into mutual funds. It's super accessible, and it's a fantastic way to get started and build wealth over time. Then, on the complete other end of the spectrum, you've got someone like Ramesh. He's what we'd call an ultra-high net worth individual. He can easily write a check for 50 lakh rupees or more to get a fully personalized, bespoke portfolio management service, or PMS, that's tailored to his exact financial goals. But what about Mahesh? He's stuck right there in the middle. He's got a pretty significant lump sum, maybe 10, 20 lakh rupees that he wants to invest. Now that's way more than a typical SIP, but it doesn't quite meet that high minimum for a PMS. So until pretty recently, his main option was just, a bigger mutual fund investment. And this is the exact gap that SIFs are designed to fill. They were launched by the market regulator, SEBI, to create a brand new pathway for seasoned investors who are in exactly Mahesh's position. So what are these things really? Well, the easiest way to think about SIFs is as a kind of hybrid. They're regulated and managed by the big established mutual fund houses, the same ones you already know, but they offer strategies that are a bit more complex, a bit more sophisticated, sitting right in that sweet spot between mass market mutual funds and those super exclusive portfolio services. And here's the key number, the entry ticket, if you will. The minimum investment to get into a specialized investment fund is 10 lakh rupees. So right away, that positions it for investors who are ready to put a more substantial chunk of capital to work all at once. But it's not just about a higher entry point. What really truly sets an SIF apart from a regular old mutual fund? Let's pop the hood and look at its most unique and, frankly, powerful feature. The single biggest difference is that the fund manager can short sell. Now, in simple terms, short selling is an investment strategy where you're actually betting that a stock's price is going to go down, not up. And this is so interesting because it just flips the script on how we're all taught to invest. We all know the mantra, buy low, sell high, right? That's a traditional long position. Well, shorting does the exact opposite. The goal is to sell high, then buy low, and pocket the difference when the price drops. And here's where SIFs get really interesting. They're allowed to do something called naked shorts. That means the fund manager can short a stock that the fund doesn't even own yet. This is a really powerful tool that can potentially generate returns even when the whole market is going down or just moving sideways. Of course, an advanced strategy like this comes with risks, so there have to be rules. SEBI has put a very strict cap on this. These unhedged or naked, short positions can't ever be more than 25% of the SIF's total portfolio. It's a critical safety rail. All right, so now that we get the basics, let's put this new player in the ring with the familiar champs. How does an SIF really stack up against a mutual fund on one side and a PMS on the other? This chart just lays it all out perfectly. You can see SIF sitting right there in the middle. The minimum investment is higher than a mutual fund for sure, but look at the fees. Just like a mutual fund, they only charge an expense ratio. There are no performance-based fees, which are super common with a PMS. But for me, the most critical line here is tax efficiency. SIFs get the same high tax efficiency as mutual funds, and that is a huge advantage over a PMS. See, with a PMS, you own the stocks directly, so every single time the manager sells a stock for a profit, bam, that's a taxable event for you that year. With SIFs and mutual funds, you only pay tax when you decide to sell your units. Big difference. So, after all that, we get to the big question, the one that really matters. Now that you know what an SIF is and how it works, is it actually the right investment for you? When you weigh the pros and cons, it really is a balancing act. On the one hand, the potential for making money in different market conditions, plus that high tax efficiency, is really appealing. But, and this is a big but, on the other hand, these are brand new. They have absolutely no long-term track record. We don't know how they'll perform over 5-10 years. And their strategies are just, well, more complicated. So, what are the experts saying about all this? Well, the consensus right now is pretty clear. Think of SIFs as a potential addition to a portfolio you already have, not a replacement for your core investments. It would be a huge mistake to sell off a solid, well-performing mutual fund portfolio just to jump into a new SIF. And honestly, since they're so new, the most prudent advice is probably to just wait and see. Let's give them 5 or 6 years, let a real track record emerge before making any big moves. And maybe the most important takeaway from all of this is this simple, timeless piece of advice. Just because an investment product is new or sounds really complex and fancy, that doesn't automatically make it better. If you can't easily explain it to someone else, you should probably think twice before putting your hard-earned money into it. And that really leaves us with a final question for you to think about on your own investment journey. As you build your wealth, what's more important to you? Is it chasing potentially higher returns by using really complex strategies? Or is it sticking with the proven, powerful, and often underestimated advantage of simplicity? The right answer? Well, that's going to be different for every single one of us.